So,
So,
um,
good morning, friends.
this is
This
Sudhan.
is Sudhanshu Karpanda.
So today
So, today
we'll
we'll
discuss
discuss
about
about
responsibility.
responsibility accounting.
So
So,
basically, what is
basically,
the
what is
responsibility?
responsibility accounting?
So,
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 so
first
first
we'll go to
we'll
the
go to the
introduction part.
introduction part.
So
So,
responsibility
responsibility accounting
is
is
generally
generally one
accounting
accounting
system
system
of
of
control
control
through
through
which
which
responsibilities are
responsibilities are
assigned towards
assigned
the
towards the
controlling.
controlling cost.
So when
So
you
when
try
you
to
try to
control the
control
cost,
the cost,
you have to
you have to
assign
assign the
responsibility among
responsibility
different
among different
individuals
individuals
so that
so that
you can
you
put
can
a
put a
control
control
over.
over cost.
If you will not
If you will not
assign the
assign the
responsibility,
responsibility,
nobody will
nobody will
found
found
guilty and
guilty
nobody
and
will
nobody
found
will found
responsible.
responsible
Why cost
why
is
cost
high?
is high.
So
So
you have
you
to
have to
establish
establish the
responsibility.
responsibility accounting.
So this
So this
system
system
does make
does make the
individual
individual
personally
personally
responsible
responsible
because in
because
any
in
other
any other systems,
individually we will
individually
not
we will
find
not find
anyone
anyone
responsible.
responsible.
But what
But what happens in this system?
as we
As we
the
fix the
responsibility of
responsibility of individual
so that
so that
we can
we can
put a
put a
control of
control
that
over
person.
that person,
And we will
and we will
try
also
to
try to
find out
find out
why such
why such
deviation is
deviation is
occurring
occurring
between
between
actual
actual
performance
performance
and
and
predetermined
predetermined
standard
standards
when
when
exactly this
exactly this
deviation
deviation is occurring,
so that
so
that
that that
person
person
will be
will be
asked
asked
questions
questions
why this
why this
deviation is
deviation
there,
is
why
there,
you are
why you are
unable to
unable to
uh,
uh,
make the
make the
actual
actual
performance
performance
as it is.
as it is predetermined.
So the
So the
entire
entire
system of this
system of this
accounting
accounting
says
says
the
the
responsibility for the
responsibility for the
control of
control of
cost,
cost,
which only
which
rests
only
upon
rests
the
upon
main,
the
not with
main,
the
not
system.
with the system.
It
It
always we
we
always
always
say
say
that
that
this
this
system is
system
not
is
good.
not good.
We
We
always
always blame
in
system
every
in
case.
every cases.
So, but
So,
in
but in this case,
we will
we
not
will not
blame,
blame system.
rather
Rather, we will
fix the
fix the
responsibility of
responsibility of
one
one
person
person
so that
so that that
person can be
person
asked
can be asked
question.
question.
That person
That
has to
person have to
justify
justify
why the
why
cost
the
has been
cost has been
incurred.
incurred.
So that
So
when
that
the
when the
person will be
person will be
accountable,
accountable,
he will
he
also
will
try
also
to
try to
minimize that
minimize
cost
that cost
at his
at
level.
his level.
So this
So
is
this
all
is
about
all about
this
this
responsibility.
responsibility accounting is concerned.
So
So
next part is
next part is
about some
about some
definition.
definitions.
So
So
responsibility
responsibility
accounting is
accounting
a
is a
system of
system of
accounting
accounting
that
that
recognizes
recognizes
various
various
responsibility
responsibility
centers
centers
throughout the
throughout the
organization.
organization.
So you
So
have to
you have to recognize
various
various
responsibility
responsibility
centers. You have
centers.
to
You
fix
have to fix
different
different
responsibility
responsibility
centers
centers
throughout the organization
throughout the organization
and
and
reflect
reflects
the
the
plans and
plans and
actions,
actions,
whatever the
whatever the
plan
plans
and
and
action
actions
you are
you are
fixing.
fixing
That is
that is reflected
by
by
assigning
assigning
particular
particular
revenue,
revenues and cost.
whatever the
Whatever
revenue
the revenues
cost
and
you are
cost you are
planning to
planning to
reflect
reflect
to the person
person
having the
having the
responsibility.
responsibility.
So that is
So
all
that is
about.
all about responsibility accounting.
So if
So if you want to define in
another
any
way
other way,
that you can do
that
it
you can do it in this
that
way, that responsibility accounting is a method of accounting
in which
where
costs
costs are
are
identified with persons
and
and assumed to be
capable of
capable of
controlling them
them
rather
rather than with products or functions.
in other
In other cases, we generally
assign
costs to the different products, different functions, different departments.
but
But
here
here
it
it is
fixed
with one person,
so that
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 from that point of view,
cost
can be controlled.
So
So I am discussing about
responsibility
responsibility centers.
responsibility
Responsibility center means
it is
the area,
or you can
or you can say
it
it is
the position where
you can fix the responsibility.
So from
So
that
from that point of view,
we have
we have divided responsibility centers
into
into three types.
One is
expense center,
one is
profit center,
and
one is investment center.
So
So one by one we will discuss.
So first
one is expense center.
So what is it?
So what is this?
So when the
responsibility center
it's fixed
for one area where only incurring of expenses
and
measuring of that expenses is done.
So this
center is confined to measuring of different expenses. Generally, we find in any organization
the
service centers are usually incur expenses. So here the contribution of service department
and
different office and administrative department
we have to
do that.
But
the difficulty is mostly these departments cannot be denominated in monetary terms.
You cannot
put them in money terms.
You cannot
express them
in money
terms.
So
instead of monetary terms, these are expressed in quality of service term. So that it can assist to the entire organization.
So this is
about expense center.
So now
we will discuss about profit center.
What is
profit center?
So
responsibility center,
which is
measured
in terms
of both
expenses incurred as well
as revenue earned
is known as
profit center.
Because
as you know, when you try to find out profit, you have to deduct expenses from revenue.
So here
you have to take care of both expense
and
revenue.
So this
is there. So next is the resultant
of a profit
center
is a revenue
realization,
which is made
either through the internal sales
or to
the external consumers.
The revenue
can be realized either through external sale to outsider or through the internal consumption. You can go for external sale or you can go for internal consumption,
which is
an outcome of internal transfer from one department to another department. If you are transferring your
you can say
your materials where you are dealing.
If you are
transferring that
to another
department.
department. And if
And
that
if that transfer
is done
is
at
done
a
at a
profit
profit position,
that
that can be
also
also
recognized,
recognized
because
that is also
a
a
source of
source of
profit.
profit.
So,
So, for example,
the most
ideal illustration is the industry with process,
because
it involves various processes
which
which transfers
the
the output
from
from
one
one process
to another
with a profit margin by considering the sale price.
at that
At that time,
when
one thing is transferred to one process from another process,
that is
considered as a sale,
and it
and
is
it is
given
always given
at a
at
price
a price by keeping as a profit margin
that is
that is
considered as
considered as
sales
sales price.
This is
This is about
profit center.
profit center.
Now the
Now the next one is
investment
investment center.
What is
What is investment center?
So
So
here
here
in
in investment center,
the
the
manager
manager is
responsible
responsible for the effective utility of assets
in order
in order to
earn
earn the best rate of return
out of the
out of the investment or asset center.
whatever
Whatever investment you are doing,
whatever
whatever
asset in
asset
which you are
you are employed your capital,
you
you
always
always try to get a best rate of return out of it.
In fact,
In
you
fact, you
always
always try to effectively
use
or
or
utilize that asset.
So one
One manager will be held
responsible
responsible for that purpose.
and that
And that center, that responsibility center is known
investment.
as investment center.
So here
So here
you
you have to deal
that
that
the
the
exact
volume of asset employed
cannot
be
asset
asset for
single
department responsibility center. So
as I have
as I have said,
you
you cannot
easily
assess, you cannot easily calculate
what should
be the exact volume of asset
for
for
single
single department.
So
difficulty in the assessment on the volume of asset
is only
there to the utility of the asset,
which is
not only in
responsibility
center,
but
but also in more than one.
It cannot
be in one department, one responsibility center.
It will be
more than that.
So in
aggregate,
when you say
about investment center, always remember investment centers
are
those responsibility centers
where
the
where
you have to analyze
that
where you have to invest,
in
which application source you have to invest,
in which
asset you have to invest,
in which
project you have to invest.
These are
the things of investment center.
So now
we'll discuss what is this process of
this
responsibility accounting system.
So
stepwise we will go one by one.
First one is identifying different responsibility center and defining the various
responsibility of managers.
Yes,
as I have said from the beginning, that first you have to identify
various
responsibility centers. Then you have to fix,
you have to
define the responsibility of any manager.
This is your
first step.
In second
step,
you have to set the
targets of the responsibility center.
Because for every manager, if you will not
fix the target,
then you
cannot evaluate their performance.
So
every center, one target will be fixed.
So second
step is all about establishment of targets.
And in third step, you have to compare the performance with determined standards. So
there always will be a target
that is predetermined, and next one is the actual performance. So you have to compare that performance with the predetermined standards. So if any deviation occurs between predetermined standards and actual performance, that will be taken care seriously, and that will be reported to the top level management. Any type of deviation, if we will find, that will be reported to top level. So next step is correction of deviated course of action. So your responsibility does not end when you will report that deviation to the top level management. So after reporting the deviation, it is the responsibility of that concerned responsibility center to rectify that deviated course of action. So in the due course of rectifying the deviation, remember the flow of work in future should be uninterrupted. It should be the aim of that concerned responsibility center. So we will do something. We will take some corrective measures so that the uninterrupted flow of work will be possible in future. So these are all process, these are all steps of responsibility accounting system. So now we will discuss what are the advantages of responsibility accounting. So as I have said, responsibility accounting is always used as a monitoring and controlling device. So it is always there to supervise, to monitor, to control. So it works as a device of that. To achieve the target, whatever the target we have established, we try to achieve that target. So here these are some objectives of responsibility accounting, and you can also say that these are all advantages of responsibility accounting. So first here responsibilities are assigned. Any other system, responsibility are not assigned to individuals. This is done in responsibility. First, it is an elevator of performance. Here you can evaluate the performance. How you are doing, how you are performing your work. That can be easily evaluated by using responsibility accounting system. So next one is delegation of control. I always say one person cannot do everything in any organization. Everyone has to take the responsibility. So here also the control is delegated. So that control can be done. Control can be possible. Every position, every sphere, every aspect. That is why controlling can be possible in responsibility accounting. So next one is planning is facilitated. So how planning is done? How you will go for planning? These are also the duties or responsibilities of responsibility accounting. Because as we know that without planning, nothing is possible. Everything needs some kind of planning. So these are all advantages of responsibility accounting. So this much for today. Thank you. We will meet next class.